When people hear the word investing, they often imagine Wall Street traders, complicated charts, and needing thousands of dollars to even get started. That's not true anymore. Thanks to technology and new investment platforms, you can start building wealth with as little as $100. Yes, just $100 can open the door to a brighter financial future. In this guide, we'll break down exactly how you can start investing with $100, even if you've never invested before. We'll keep it simple, friendly, and practical. No fancy jargon, no confusing math. Why $100 is enough to start? You might be wondering, can $100 really make a difference? The answer is yes, and here's why. Low barriers today. Many apps allow you to buy fractional shares, meaning you don't need hundreds of dollars to buy one stock. You can own a piece of Apple, Amazon, or Tesla with just a few bucks. Compounding magic. When you invest, your money can grow over time. Even small amounts add up if you start early and stay consistent. Building the habit. Starting with $100 isn't about getting rich overnight. It's about learning how investing works and creating the habit of putting money to work for you. Think of it like planting a tree. $100 won't grow you a forest overnight, but it's the seed that can eventually become something much bigger. Step 1. Set your money mindset. Before we dive into apps and investments, let's talk about your mindset. Investing isn't gambling. It's not about getting rich quick. It's about growing wealth slowly and safely over time. With $100, you're not trying to double your money tomorrow. Instead, you're learning how investing works, getting comfortable with the process, building the foundation for future investments. If you can think long-term, you're already ahead of most people. Step 2. Choose where to invest your $100. There are many ways to invest, but not all are beginner-friendly. Let's look at the best options for starting with $100. 1. Stock market. Stocks and AMP, ETFs. The stock market is one of the easiest places to start. Thanks to apps like Robinhood, Fidelity, Vanguard, or M1 Finance, you can buy stocks or ETFs with no big fees. Stocks. A stock is a piece of ownership in a company. For example, buying Apple stock means you own a slice of Apple. ETFs, exchange-traded funds. Think of ETFs like a basket of stocks. Instead of buying one company, you buy a group of them. This spreads your risk. Beginner tip. With $100, consider an ETF like the S&P 500, which includes 500 of the biggest US companies. It's a simple, diversified way to invest. 2. Fractional shares. If a stock costs $500 a share, you don't need the full $500. Many apps let you buy fractional shares, meaning you can invest $10, $50, or $100 into big companies. Example, you can own $20 worth of Amazon, even if one share costs over $100. 3. High-yield savings accounts, HYSA. Technically, this isn't investing in the stock market, but it's a safe place to park money and earn interest. Some HYSAs pay 4 or 5% interest, which is much better than a traditional bank account. If you're nervous about risk, this is a great first step. 4. Micro-investing apps. Apps like Acorns, Stash, or Public let you start with just a few dollars. They round up your purchases and invest the spare change. With $100, you can create a small portfolio instantly. These apps are designed for beginners and make investing super easy. 5. Robo-advisors. Platforms like Betterment or Wealthfront act like an automated financial advisor. You answer a few questions, like your risk level and goals, and they invest your money for you. Perfect if you want a hands-off approach. Step 3. Decide your investment goal. Now that you know where to put your $100, ask yourself, what's my goal? Here are some examples. Short-term savings, 1 to 3 years. Safer options like high-yield savings or bonds. Long-term growth, 5+ years. Stocks, ETFs, or robo-advisors. Learning and experimenting. Fractional shares of companies you like. Knowing your goal helps you pick the right place for your money. Step 4. Build a simple $100 investment plan. Let's put it into action. Here are a few beginner-friendly strategies. Option A. The Safe Start $100 High-Yield Savings Account. Purpose. Learn discipline, grow slowly, and keep your money safe. Option B. The Balanced Beginner $50, S&P 500 ETF, broad stock market exposure, $30. Fractional shares of a company you like, Apple, Tesla, etc., $20. Kept in savings for flexibility. Option C, the hands-off investor $100, robo-advisor account, Betterment Wealthfront. Purpose: let professionals manage your money automatically. Option D, the Explorer $60, ETFs $20, fractional shares of your favorite company $20. Try a micro-investing app like Acorns. You don't have to choose perfectly. The important part is just starting. Step 5. Keep learning and stay consistent. Investing $100 is your first step, but the real growth comes from consistency. Imagine if you invested $100 every month. In 10 years, that's $12,000 of your own money. If your investments grew at an average of 8% per year, that could grow to nearly $18,000. That's the power of consistency plus time. Tip: treat investing like paying a bill. Set up automatic deposits so you don't have to think about it. Mistakes to avoid when starting with 100 and chasing. Get-rich-quick schemes. If it sounds too good to be true, it usually is. Putting all $100 into one risky stock, spread it out with ETFs or fractional shares. Expecting fast results, investing works best long-term. Not continuing after the first $100, the real magic comes when you keep adding. A friendly example, Sarah's $100 investment. Let's bring this to life. Sarah is 22 years old and wants to start investing. She only has $100 to spare this month. She puts $80 into an S&P 500 ETF for long-term growth. She buys $20 of Apple stock because she loves Apple products. Every month after, she adds another $100. In 10 years, Sarah has invested $12,000 of her own money. Thanks to compounding, her portfolio grows to nearly $18,000, $20,000. All because she started with just $100. Starting with $100 may feel small, but it's a powerful first step. The amount matters less than the habit. By investing that first $100, you're proving to yourself that you're ready to take control of your financial future. Remember, $100 is enough to start. Use beginner-friendly platforms. Focus on learning, not quick profits. Stay consistent over time. Think of this as planting your financial seed. Water it each month, give it time, and watch it grow into something life-changing. So what are you waiting for? Your future self will thank you for starting today.